Tesla has just announced 8 price cuts in the US. The most interesting part here is that Tesla also added this new option to order the Model Y all-wheel drive, which Tesla simply calls a Model Y. There's no trim name really, it's just a Model Y. They don't call it standard range, although it does have less range, and this is probably the 4680 battery Model Y with the structural pack. The difference in price is about $3,000 from the long range model, but range is not the only difference. The cheaper one also is a little bit slower, doing 0 to 60 miles per hour in 5 seconds instead of 4.8 seconds. I wonder if that's because when we first learned about the 4680 batteries, many thought that perhaps Tesla is limiting the range via software, and potentially maybe in the future you could upgrade the range via a software update, but that does not seem likely actually now. It remains a question, is this because it's actually slower because of the motors, or is Tesla just simply limiting the speed via software so that you can upgrade the speed via a software update later? We also know that Elon Musk thinks there's a lot of room to improve casting, so maybe we could assume with that some of the weight would also come off, which would make the vehicle faster without improving the motors. Overall, this specific development of Tesla adding the 4680 battery model on the website to order, I would say this is a positive development, certainly because it shows confidence that Tesla is able to ramp the production quickly for this specific model, just like Rob Maurer says. Next, reductions for the Model S and X. These are really no surprise. The inventory has been a little bit high in the US for the X especially, and still I think we can expect more price cuts. Like I said in the earlier videos recently, certainly I expected Model S and X price cuts, and it's happening now, but Tesla has fairly decent margins on these, so there's still more room to go. Looking at the Model 3, we had price cuts of $1,000 each for the standard range and the performance versions. This perhaps signals, because this price cut is a little bit smaller than the one for a Model Y. The Model Y was about $2,000 for the price cuts. You could make a few conclusions here. One, that's because the Model Y prices before were increased and now they are basically back to what they were after the initial price cut back in January. Or the second conclusion that you can take away from this, maybe Tesla does not have very high margins on the Model 3 anymore, and Tesla cannot do a huge price cut for the Model 3 specifically. If you look at the inventory levels in the US, clearly the Model 3 generally is higher than the Model Y, and also remember that the Model Y, the 4680 ones were just dumped multiple times on the market, spiking the inventory. So if you did have inventory available on days like here, then you wouldn't have as much Model Y inventory right now because it would just be smoother. So if people would have been able to order the 4680 battery Model Y, everything would have been a little bit less volatile. But I think overall it's pretty good. And really right now, the most important thing is the earnings call. What are the gross margins? I think it is also pretty smart that Tesla announced these price cuts right after the market fully closed, including the after hours. And today is a holiday, the stock market is closed. So yeah, the market will have 3 days to observe what is happening with the price cuts as well as the inventory levels. If the inventory levels drop a lot, then perhaps we won't really have a negative response to these. But if the inventory levels do not drop by a lot, then, well, we might have a little bit of a buying opportunity. That is what Gary thinks also. And we have Zero Sum Game, who has been extremely bullish on the Tesla Megapacks earlier and Tesla Energy. Q1 earnings did not show exactly what he predicted, so I wouldn't really take this too seriously. although he is using extremely strong language, I can guarantee you we'll be back in the 130 to 140s, with auto gross margins excluding credits being less than 20% in Q1. Tesla bull Jeff doesn't see how the gross margins would drop by a lot, meaning below 20%, which is what Tesla promised to us, minimum. And he points out that Tesla usually beats earnings per share estimates, and Zero Sum Game then replies that, yeah, if we have higher than 20% gross margins, we actually surge. Generally, when someone says, I guarantee you something about an investment or a stock or anything like that, be skeptical, generally speaking. They may have a good point, but it's never guaranteed. It's always probabilities. Beer the Tesla guy has some of the best price charts. This is the Model Y long range, and as you can see, it used to be $49,000 back in 2021, not a long time ago, and performance was at 59,000, almost 60,000. And the standard range Model Y was 40,000. Now that was a deal. And if we look at the situation right now, we are nowhere close to having a model that is actually $40,000. The cheapest one is at $50,000 currently. The long-range Model Y is still about $4,000 above its previous low in 2021, so we still have quite a bit of room to cut if we need to. And here's the chart zoomed out for easy comparison. We have another update from Tesla, and some will view this as bullish and some will view this as bearish. Based on new IRS guidance, the $7,500 credit will be reduced for Model 3 rear-wheel drive on April 18th to $3,750. So what we now sort of probably know is that all of the other models almost certainly are still eligible if they were eligible before, except for the Model 3 rear-wheel drive. It doesn't seem like they will get the $7,500 tax credit anymore, even though they are building that battery factory in the US in collaboration with CATL. It doesn't seem like the government is telling Tesla, yeah, we'll give you an exemption for now, although the government is certainly working in some loopholes that will be available probably to some automakers to still keep getting these higher credits, even though the batteries are not produced in the USA, but it appears that Tesla will not be able to participate in that loophole, but we will find out for sure on April 18th. This could also be perhaps, and this is unlikely at this point, but still a very small possibility remains, that Tesla might just be saying that the credit would be reduced because that would create more orders, but I don't think that's the case here. Very unlikely to be the case now. Keep in mind that document is not published yet, so it could change. We don't know for sure what's going to happen yet. Just like remember how in the beginning of January, Tesla did not qualify for these tax credits, things may change here as well. Although this time I don't think there would be much of a backlash because this is about China. It's no longer IRS calling an SUV not an SUV. The reason why I said that some people will see this drop of 50% in the tax credit as bullish is because they thought Tesla would lose the whole tax credit. And I certainly consider this as generally good news, although some people will not like it really. Before, Elon Musk couldn't borrow more than 25% of the total value of his pledged stock, about 238 million shares, which in today's dollars would be about $43.5 billion, and 25% of that would be about $11 billion. That's a lot of money. I like this because that reduces the possibility of Elon ever being margin called, which would create an absolute avalanche of Tesla stock sales from Elon if Elon ever did get margin called. Although, this now increases the possibility that Elon would actually sell some Tesla stock to have some cash if he already maxed out his borrowing. If you can tolerate a little bit more risk, then you won't like this, but if you are more of a conservative investor like I am, I love this. I love buying opportunities, but usually Elon only sells about $4 billion of Tesla stock at a time. Imagine if he sold 10 times that amount in one day. That's what roughly being margin called is. That is not great. I'm oversimplifying here, but the morale of all of the employees that have stock options and a lot of other people, I think that would be a little bit too much too quickly, even though that would be a fantastic buying opportunity. But then also Elon would lose his stock, and that would also lower his motivation, I think, as well. I wouldn't see how this would be great for the company if Elon was margin called. So this change I certainly welcome. And this is the Tesla stock buying opportunity explained by Elon Musk. My name is Mal Posius. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.